Welcome back, folks. Greg Silverman here for another session of Come Learn with Me. We curate a lot of articles out there that are of interest to us, and then we measure the likes, the shares, the views, etc., that people get on our own social platforms. And then we rank them, and then we go through them together with you on a kind of a weekly Come Learn with Me session. This article is interesting. I love charts. I love price charts. I think they say a lot. However, this percolated to the top, although now it's a little bit dated. 17th of April is when it first came out. But nevertheless, we can always learn something. And so what Callum Thomas does here is a selection of 10 macro market charts, which he handpicks from around the web on Twitter. Hope you enjoyed. Okay, so we're going to go through them, although the markets have been very volatile and moving very quickly. So we're going to have to go and do a little bit of our own research. But the correction drivers update, he speaks about the Poland ETF, the IG credit ETF, the ARC New Tech Fund, and the S&P. So let's take a look at a few of the ourselves and just get an update if we can. Let's start with the S&P. So this is where it was on the 17th of April. Let's bring it up here because we have had some movement, but there is something I want to point out as I was looking at this earlier. And again, just bear in mind that we're not heavy technical analysis people. We just like to look at trends. So we do follow trend lines quite a bit. So back here, and this is a daily chart, back in May, we were kind of hanging around at those old 43.92 level. Let's get this going over here. The weekly. And we're going to make it a bit longer, 2 years. Maybe 1 year might be a better period to look at. Okay. And so what we saw from the 17th, when we were hanging around the 43.92 areas, we've kind of taken, so we were back here. We would keep, let me put in some lines for you folks. Let's annotate that. So when the article first came out, we had this approximately over there saying how we were keeping, staying above trend line. We're now come down, and what's interesting to me is we initially made in February this low at 41.14 on the S&P, and we've subsequently taken it out to 40.62 on this go around. And despite the last few days being really nasty days, we haven't made any terrible breaks. So that general area here of between 40.62, 41.45. Again, I don't think trends are to the exact point, but we're still hanging above that. So there is still hope. The market looks a little bit sold out here on these technicals. So so that's interesting. We did make, based over here, we've gone subsequently further down, but we're still in kind of the original correction area, which was from here down to there. Now the other chart I want to bring up, which has just been absolutely bludgeoned, is the ARC New Tech Fund, and for that I think we should probably get a weekly chart going. So this has just been, now it's the old adage that where the money flows and the prices rise the most, that's when the tide goes out, right? It's these stocks that get hit most. In a previous video we took a look at Rivian, the EV stock. Look at this, man. Look at this. I'm going to just enlarge this. Let's go make it a 3-year chart. Let's see where ARC came from originally. Yeah, wow. So its March lows back in 2020, its COVID lows seem to have been the lows for some time. I don't know how far out this goes. And clearly we had a great run up, and it's just, it's almost given back almost everything to where it is. So this is an ugly looking chart. I don't even need to draw trend lines, but clearly the trend is lower on this one. Let's go there, or whoops. Or let's just keep going down. So until those trend lines are broken from the upside, there might even be a steeper one going on now. I don't think this one's worth dabbling in just yet. Again, just my view, not investment advice. The last one I want to look at from the article is the LQD, which is the investment grade liquid corporate bond ETF. And you're getting a similar look here. Wow. This is just with the interest rates backing up, going higher across the curve. And that's oversold, but in a deep downtrend. So one probably not worthwhile from my perspective, nibbling just yet. Okay, some of the other charts here we don't have to reproduce because they're a bit longer lasting. Amazon versus commodities. Cycle has shifted, unfriendly regime for tech. So Amazon back in, is that 2002? Yeah. Amazon's had a great run. And that's Amazon relative to the commodity index, where it seems to have just diverged now. It's underperforming the commodity index. This is a great chart. I really like this one. The rise and rise of tech, permanently higher plateau. Let's take a look at this. This is tech in, I don't know when that is exactly. It's called the 70s. This must have been about 2000, 2002, and this is the bull market now. Tech versus S&P. So every time tech got extended to that point, it looks like, which is over one standard deviation, probably more, reversal comes in. So that's an interesting chart. That's indicative, charts always speak the language you want them to speak at the time, right? Retail investor sentiment, decent correction, and dwell on that one. The hidden bear market, so the internals of the market, understood as a telltale sign of weakness, and basically went into hidden bear market. Weeks of new highs versus new lows. Yeah, so we're continuing. Internals of the market, as they call it. Market is making individual issues. There are more individual issues making new lows than there are making new highs. It's NASDAQ and NYSE. So that's interesting as well. So, some stocks are doing worse than others, I guess. Utilities are interesting because they're also affected by interest rates. But since the beginning of 2022, utilities are doing better than the S&P. Agribusiness, this one's interesting. Agribusiness on the move. I think this is MOV. Agribusiness ETF breaking up versus the S&P. So there you go, which makes sense. Agriculture is doing better with inflation, as is fertilizer, etc. Supply cost problems. Number of S&P 500 companies citing negative impact. Supply chain, labor costs, and shortage. Famous and clever economist Dr. S&P 500 is forecasting a slump in the ISM. What is this? This is the movement of the S&P year over year, and it seems to mimic the ISM numbers, which are the manufacturing PMI numbers. Finally, asset valuations, commodity, the least dirty shit. US asset classes valuation versus history. So this is interesting. Property market valuations are higher than they've ever been since 1983, potentially back in, that was 2007, just before the 08 financial crisis, which was brought about by subprime. So that would be interesting to see if property is going to revert. Yeah, we have the S100 and commodities down here, which haven't really peaked up. One more chart, cyclicals versus defensive, strength to weakness. Yeah. Okay, well, there you have it. So slightly outdated charts, but interesting nonetheless. I hope you enjoy that. That's probably my favorite one right now. All right, guys, I hope you enjoyed that. Please subscribe and like, and take a look at some of the links below. We've got some really good investment material and research you can all follow. Greg Silverman out for now.